My name is Michael Guyad, publisher of the Lead Lag Report. Join me for the hour, special guest Simon Moores, CEO of Benchmark Minerals. Simon, for those who are not familiar with who you are, your background, talk about what you do, how'd you get involved in the data space of EVs and batteries, and what are you doing currently?
Yeah, cheers, Michael. Yeah, Benchmark, we collect supply chain data on the lithium-ion battery industry from lithium, cobalt, nickel mines, all the way through to the battery cell. It's something I've done all my life, really. In my previous job, straight from university, was there for 8 years. Then in 2014, felt the need, it was actually 2013, felt the need that lithium prices and other data points across the supply chain needed to be collected methodically, with expert sort of detail, and we built a independent subscription-based business off the back of that. That's now obviously going through the roof in the last 4 or 5 years. So that's the nuts and bolts of me and the business.
Okay, so talk to us a little bit, Simon, about the process of data aggregation when you're looking at this space. How many different sources are you compiling? Are there concerns around accuracy? Talk through that process. I think often people, when they see different data, they're seeing the outcome, which may look nice visually, but there's always a risk of garbage in, garbage out when it comes to this kind of stuff.
Yeah, it's a really good question, actually. By the way, I didn't know what the questions were, so I said go with the flow. By the way, I like the freestyle of it.
When I do these, I just do a couple of quick reviews of tweets, and I just riff. So we're in good shape here.
Yeah, excellent. No, good stuff. Yeah, actually, it's the way we collect data is firsthand from the source. So being in the lithium industry, lithium, graphite, and to a lesser extent batteries, sort of early days, but since 2006, I've been in this industry. And I'm still young, despite what my picture looks like. That's the one thing. But you have the contacts, first-hand contacts. You have knowledge of what's happening, and you're constantly collecting the set data points, whether it's prices of these raw materials, whether it's supply from a mine level, from a plant level, whether it's demand could be colloquial, it could be specific numbers. But the key thing is detail, number of contacts, is the quality of contacts, is the methodology that you use. Do the same thing you did today, that you did yesterday, and that you'll do tomorrow. And of course, it will tweak it along the way. But consistency is key. And that means over time, 8 years in for Ben, really get this consistent quality data set that you can then scrutinize and do trend analysis on. And so we've done that, but a very, the most detailed level in the world, from whether that's lithium, cobalt, graphite, nickel, through to the next level, which is the chemical plants where it gets refined, through to then the cathodes and anodes, through to then the battery plants, the gigafactories that are being built around the world. And as a result, the data sets that we've built, for the most part, certainly the midstream of the battery supply chain and the downstream, the gigafactories, didn't exist before. So we've built these sets from scratch, maintain them, and then once you have this awesome first-hand data, you can really do lots of cool things with it, whether that's subscriptions, whether it's a consultancy for large companies, automotive OEMs, governments, price setting, prices that are used in contracts, which is a big part of our business. It allows you to do a wealth of different types of businesses. But fundamentally, that's what we've done so far.
Okay, so you're constructing these indices around raw materials that go into lithium-ion batteries, electric vehicles, energy storage, the sources of those prices.
Yeah.
And we'll talk about how the things have gone vertical. How do you account for changes or fluctuations that may look different from region to region? Because if you're not having it on an exchange where there's a natural auction, you're relying on some of the idiosyncratic aspects of the particular latitude, longitude of wherever the data is being supplied from.
Yeah, for sure. I mean, these industries are global anyway, but the key is resource. It's literally people picking up the phone, communicating with the market. People, A, know what they're talking about, but B, can speak to existing contacts, new contacts. So it's constant hard work. And when I mean first-hand data, I mean the people that are producing these raw materials and the people that are buying these raw materials. So very much we sit in the physical primary supply chain of this. Everything on exchanges, for the most part, exchanges tend to be derivative contracts, like paper contracts and things like that, which sits outside of the physical supply chain. And that's a big difference at the moment, because where we are with the lithium-ion battery and EV space, we're building this blueprint from scratch. So still very much about the people that actually produce it and the people that buy it.
All right, so let's level the knowledge field a little bit for the audience. So everyone is obviously familiar with these trends around EV and this focus on needing the lithium-ion batteries. But I want you to talk about some of the forecasts that you've seen in terms of how much this is going to be, how long it's going to take for this to become more mainstream. I've heard you talk about this idea that politicians do a disservice by saying that you're going to have 50% of all cars being EVs in 5 years because it's not realistic. So talk through that a bit, because I think that will help to explain not just prices now, but the likelihood of trends changing going forward.
Yeah, good question. So for me, the way I frame it is in a simple narrative for my brain, let alone all the things that are going on, is it takes 7 years on average to build a lithium mine and chemical plant from scratch. And it takes 24 months to build a battery plant. So the thing is, you've got this great raw material disconnect, is what we call it, and understanding what is the slowest link in the supply chain, considering the whole EV industry, which is really lithium-ion batteries we're talking about. The whole thing's being built from scratch. Timelines of scaling the entire supply chain will then be dependent on what's the slowest link, what's the slowest thing it takes to build, unless there's some like technological disruption, which is nowhere on the horizon anytime soon on decade levels. What's the slowest link in the supply chain? That's building the mine level. And as a result, lithium, it used to be lithium and nickel, but certainly lithium at the moment is the biggest fear. And as a result, you've got politicians, country level, top of the tree politicians that are talking about EVs now in the millions and millions of units. And there's no doubt it will get there, but not in the mid 2025s. There needs to be, if you're talking about EVs, really, then you mean lithium-ion batteries. But if you're talking about EVs, then as a result, it needs to be mining. And people have to now connect the dots and understand the people that are making big statements, OEMs and politicians, need to understand that actually you've got to build more mines. And that's a big issue at the moment.
Okay, so it's interesting because when I look at, I'm going to try and share it in the space to make it a little bit clear. I couldn't do it just there, but when I'm looking at the charts that you've got on your site showing the different components that go into the lithium ion, these charts went vertical, looks like starting around third, fourth quarter of 2021, which is around the time that Tesla also started really going vertical. How much of the price movement in terms of the input side here is legitimate in terms of new activity versus maybe speculation from the same types of money or same type of investors that go into the Teslas of the world?
On the raw materials, you mean?
Yeah,
like
yeah,
lithium?
exactly. Right.
Yeah, it's definitely demand. It's a simple structural deficit on supply demand. What we've had is the last 18 months, especially, the EV industry, EV demand, which used to sit inside of China, but has definitely hit outside of China and almost really outside of Tesla as well. That wave has now arrived. It's not even the major wave yet, but it's certainly the beginning of this mainstream, pure EVs becoming mainstream. That's now hit the raw material industry. And I think that the key thing I look at are lithium prices and cobalt prices, because over 50% of lithium and 50% of cobalt produced are used in lithium ion batteries, which means that when you look at those price curves, they're battery powered. And that is the prices going up, as you see, for the most part, are not speculation. That's actual demand driven stuff. Lithium price is going 5x. That's demand driven stuff. There hasn't been enough investment in lithium mines 5 years ago. We were saying this 5 years ago. We were saying this 7 years ago. Yet not enough investment happened on the lithium side, which then you see this reaction. Also in lithium, you have a bit of chaos in the domestic Chinese market where those prices do go even further higher. That's not where the global average is, but it does show that the domestic market in China is a bit more of a spot market, a bit more chaotic, but the trend is up, and that's because not enough investment was done in the mines 5 years ago.
And again, this is an area that I don't know that much about, so this is part of my own naivete on this, but I think it's good for the audience to also hear this. But talk about some of the geographical aspects of these different raw materials. So you mentioned China. I'm going to make the assumption that China's got a lot to do with this, given a lot of awareness around rare earth materials that come from China. But talk about some of the geographic aspects of this.
Well, with lithium, for example, China is an interesting one because China is the biggest market for batteries in the world. 70% are made in China, lithium-ion batteries. It's the biggest pure EV market in the world. And even before EVs, it was the biggest market for refining lithium in the world, even though China doesn't mine lithium in great quantities and certainly definitely not in battery grade quantities. And they rely on Australian spodumene mines as the breadbasket, if you like. And so China's very interesting, where people assume they mine all these raw materials, but for actually EV raw materials, battery raw materials, despite being the biggest end user, they're not the biggest producer of these things with nickel, with lithium, with cobalt. it's only graphite actually they've got a really strong position in. So China's quite interesting in that, in terms of it's the great consumer now of these raw materials, and as a result, but China was proactive 10 years ago in locking up mines abroad, whether that's in Canada, in Europe, in Africa more recently. The proactivity of major Chinese companies, and more recently companies like CATL and BYD, proactivity on the supply chain, not just thinking about EVs, but thinking about mining, started 10 plus years ago. Whereas I think for Western OEMs, it's certainly just dawning on nearly all of them now. Yeah, cheers, John. That's a good question. So actually on the power input, this kind of sits outside of my field of kind of regular interaction. But I guess my thought on this would be, I think power is electric vehicles, no electric vehicles, or somewhere in between. That the power situation is the power generation's back on the grid. I was looking recently at the nuclear energy industry, and I do feel that actually this is where energy storage comes in. So it's quite amazing to me from a very simplistic perspective that the power grid that we've got, whether it's in the UK where I live, the US, Europe, there's no real storage mechanism. You either use it or you lose it. And I do feel this is where actually electric vehicles will rely on, ironically, on lithium-ion batteries to store locally, to then feed the EV grid to help actually build resilience in these grids. But you know what? How this plays out in the next 10 years, I don't know. But I actually do think that electric vehicles will be slower to roll out, to give time for certainly charging infrastructure and moving power around, at least to be able to solve that. But at the moment, I do think they're not prepared. If, for example, a magic way of making lithium unlocks millions of, or even hundreds of thousands of tons a year overnight that you can use in batteries, by the way, which isn't going to happen, but say it does happen, then I think you'll have a problem, because you have lots of batteries, lots of EVs, and then you'll have a power demand surge that can't be fulfilled. But I do think the EV thing will be slower. I think it will play out over a 10-year period rather than a 3 to 5 year period. And as a result, I think the energy experts will get their head around that. But a bit out of my field, but I hope that gave you some thoughts behind it.
Something real quick about that, John, is that that reminds me of the conversation we had with Kevin Bambro on one of these spaces where he was talking about uranium and the power grid, and we got into a conversation around the idea that the only way you're going to have EVs take over is if you have the power grid powered by uranium to feed that supply of electricity, of energy to the batteries. Talk about for a moment here, Simon, the how efficiency and innovation works in the space. And what I mean by that is, I don't know the science of it, but I get the sense that energy doesn't really change that dramatically because it's very complicated from a lot of perspectives. Can you really make energy more efficient in terms of the space of a battery, or in terms of the way that it's used? Maybe I'm not making much sense here, but I want to try to understand if there's an aspect of efficiency improving that makes some of these problems go away over time.
I'm not a scientist, but I'm sure the energy part changes. But certainly, the more energy you can store within a lithium-ion battery within a space of a car is improving. So, for example, if you had a Model S in 2012, you could store 75 kilowatt hours of actually it was a bit less, probably 70 kilowatt hours of electricity in that car, because of how they made the battery cells, the packs, how it was engineered, and so on. Now you're looking at 85 in a Model 80 to 85 in a Model 3, the smaller vehicle already. So and there's two ways of that. One is the physical engineering of it, is call it less metal space, the cells are bigger, there's more cells in a module and that goes into a pack. And then the key thing is as well, the most crucial thing is the raw materials inside that cell, the cathode and anode, and what you do, small incremental improvements across the chemistry of these batteries, like adding 3 to 6% silicon to graphite, increasing nickel, decreasing cobalt, not to the extent people are talking about in 811, but certainly increasing it to a 622 and a slightly beyond. These things actually increase your ability to store energy in that vehicle. And that's really where the efficiency comes from, because ultimately when it's stored in a battery, you're not really losing it. It can sit there for a while. I mean, the Teslas tick over for sure. Certain EVs use a couple of percent every 3 days or something, but the fact it just sits there means you can then reuse it, or you can plug that back into your house and eventually power your house from it. I think that flexibility of A, increasing the amount a car can store, but B, having flexibility on where you can use that power, which we're not even scratching the surface of yet. I think they're the two big sort of game changers that kind of this energy storage revolution on a personal level revolves around.
I wonder if you think that because nickel, cobalt, and I see some of your tweets on this, because China controls such a large amount of these metals that are crucial to many industries. I wonder if you think that that presents a maybe unknowable risk going forward to the growth of EVs, right? Because between now and 5, 10 years, you can easily envision any number of scenarios where the relationship between China and the US gets more strained, and we get so much deeper on the end goal of EVs without having a lot of this stuff onshore, that China can then use those raw materials as bargaining chips in ways that don't necessarily help the US. Talk about that dynamic a bit, because I think that's a risk maybe people are not really appreciating in talking about the adoption of EVs.
Yeah, I think this is something that we've spoken to the Senate about a lot. Certainly, I mentioned this to the Senate when I testified in 2017, firstly, which is, for me, the biggest thing is actually on a continental level, whether that's North America, whether it's Europe, you have to build, I would say, the midstream of this supply chain first. So you have to have the industries that require these raw materials, so then the raw materials will flow into them. Because ultimately, the most economical raw materials probably won't exist in your continent. For example, nickel, Indonesia, lithium, South America, Australia. And the more expensive deposits of these, graphite, for example, is in China. But the more expensive deposits are generally not in North America. Sorry, the more cheaper deposits are not in North America and Europe, continental Europe. But actually, if you build in the chemical refining plants, the cathode anode plants, and the battery cells will have to be where the cars are made, for various reasons, then you create a hub of an industry that requires these raw materials. Then also, actually, you make a business case for even making domestic mining viable, because you're not just selling the raw material, you can value add straight away on your continent in these hubs. And this is the route that the US is taking now, from the White House down, if you like. The EU have been looking at this for 4 years now. And again, it will take time, because it's not going to change the globalization of the industry to date. There's still a base load of global trade that's going to be done. But new demand for these raw materials are going to start becoming local. I want to be local, continental, and I think that is being pushed. That's one of the biggest political things that's being pushed at the moment.
Yeah, and that's where my head's at, because one of the topics we keep on bringing up in these spaces is this broader sort of de-globalization trend that's been taking place, and all that impacts sort of these long-term forecasts. Because if you're going to go from globalization, everybody trades and you can get things from China or anywhere in the world, but to then maybe reversal, at least at the margin of that, now you've got other complications in terms of getting that material.
Yeah, and do you know what? The way I view it, because the battery industry is a small industry. It's gone from, lithium is going to be 600,000 tons this year. So it's not, from a commodity perspective, it's not a big industry, but it's growing obviously significantly. And so the way I view that is not a de-globalization, but because that global sort of lithium flowing from South America into North America and elsewhere will continue, and that will continue to grow. But actually, on top of that, it's like these hubs of additional layers of demand, let's say outside of the base load, if you like, that is local. And I would say also, it's not reducing reliance on China. It is reducing reliance on China, that's number one, but actually it's almost becoming China. Do you know what? Look what China have done. We can do that. We don't need to be sending components on 7,000-mile round trips around the world. Do we have the resources and the knowledge internally to, let's say, on a continental level and with more friendly countries to do this? And the answer is, of course, yes. It's just they've never connected the dots because it's been cheaper just to outsource it. And a final point on that, actually, as well, is I think you're going to see trade blocks emerging for EV supply chains. We've seen that the DoD have submitted to the White House through this Defense Production Act. They've submitted to the Senate to actually include Australia, Canada, UK, I believe there's one more, as also defined as domestic US sources of raw materials. So I think you'll start seeing trade blocks emerge as well, which is really interesting. Yeah, some really good points, and I agree with them. I do think that it will even out. I think it even outs from two ways. One is a bit of a long-term vision. It's to the point I made earlier about building domestic resilience whilst doing long-term contracts globally. And maybe the government starts backing these contracts a little bit to help take a bit of volatility out of the market, whatever raw material you're dealing with. So that's one way, is the government almost helping set a long-term vision, which is very much a Chinese approach. The EU are trying to do that at present. And the White House is kind of going down that route at the moment. I think there's another part and that's key to differentiate a little bit what we're dealing with, certainly with lithium and with cobalt, and nickel sulfate to a lesser extent, is that these are specialty chemicals, classic commodities like copper and like iron ore and those things. You have a bottleneck in the midstream that isn't rocket science, but they're not easy to make, battery grade quality chemicals. And that bottleneck after the mine level slows down the available supply to batteries. It has actually sped up, and qualification times have sped up, and certainly in the last 4 years, but it's still a massive slowing factor, which causes a drag on these volatile cycles. So when I view sort of battery raw materials, they'll for sure be volatile, but probably on 3 to 4 year cycles, maybe 2.5 to 4 years, rather than annual cycles like you have with more mature, more simpler metals that are used. So that's how that sort of differs slightly, but the principles still remain on these things. And for sure, at the moment, we're going for a lithium all-time highs. Cobalt's gone up 100+%. Nickel's gone up even more. And this will come down, certainly in 2 years' time. It won't fall down back to the original levels. It'll be higher because the cost of getting out of the ground is higher. So it still does follow these commodity principles, but there's a bit more of a drag on it because of the specialty chemical nature.
Real quick, but because I think this is interesting, and I myself am educating myself real time, looking at the space on just different articles I'm reading through Google as we're talking here. But the 800-pound gorilla is obviously the EV industry, and that's what's driving a lot of this movement in lithium prices. Talk about some of the other knock-on, maybe unintended consequences of the EV industry's demand there, because lithium battery storage pretty much goes into everything we're doing, including, I think, what's in our hands with our phones, because it's all about energy storage. Talk about how you think that might impact industries outside of EV, and what does that imply maybe for electronics overall?
So that's battery availability, you mean?
Yeah.
Interesting. I think electronics are always going to be okay because you're getting more money for smaller batteries, and that's they're so small that it's actually, I don't really foresee that'll become a speciality area of batteries that already exists. But certainly, I think actually lithium-ion batteries for energy storage will be much slower than people anticipate, and it already has been to date, because we were talking about this 5 years ago, and it's grown to, let's say, single-digit gigawatt hours, 4, 5, 6 gigawatt hours installed capacity a year. But everyone thought it would be much bigger than that now, because the whole lithium-ion battery industry at the end of this year will be 600 gigawatt hours, but 75% of that is EVs. So the problem is we can't make enough batteries at the moment, primarily because of the raw material shortages for, let's say, the EV demand. Let's say we can just about make enough batteries for EVs at present. It's going to be an issue, certainly back into this year for most part, and next year. But as a result, batteries are going into EVs. They're not really that available for energy storage at present. A big impact on ESS is certainly the lithium carbonate price. If that went up 5x, and that wiped out the margins of the ESS industry. That would probably use LFP chemistries, for example, which still use lithium in roughly the same quantities, a little bit less. But it wiped out the margins, and all of a sudden, these energy storage guys, are ringing us going, "What's happening? Can you help us develop indices," which we've been doing at the moment, to help using contracts to help balance this thing out. So there is a fascinating interlink, not just with availability of batteries, but the lithium price, and that hurting the ESS industry. And for now, I think energy storage is also delayed because of the burgeoning demand for EVs until the supply chain can sort itself out, which will take 5 years to sort this whole mess out, to be honest.
And the demand is not going to change or decelerate in a way that would help with that, is I think your argument.
Yeah, we're certainly in the area of demand destruction, because demand got so silly for EVs. You had Ford, you had all these other OEMs coming out saying we are throwing out like tens of millions of vehicles by 2025, 26. And of course you're not, because you're not going to have the batteries, because you're not going to have the raw materials. And so that has been that the silly numbers of EVs are coming down at the top end, but certainly let's say the base load of batteries will continue to increase significantly. I mean, the way I envisage it in my head is batteries on average, or the demand for these things, are going at about early 33% a year, give or take. Let's say 30% a year demand growth. But the raw material side is 15% a year. So it's going almost double. The demand's going almost double the pace that the raw material guys can react. And that's your disconnect. And it takes years. It will take 5 years for that to really correct itself. Doesn't mean prices will come down in 5 years. They might come down in a year and a half. But for the whole thing to start aligning, and then this big commercial EV thing to take off significantly, you're looking at post 2027 if the investment now is going into mines, which it's starting to look that way. Yeah, no, good thinking. By the way, I love Hawaii. I used to go, well, before COVID, I was going there every year to spend time in Kauai and all your amazing islands. So I love that's my getaway place. And your thinking is correct. So you're thinking of how these other technologies interact and cross over is correct. So this is why the lithium-ion battery for me is so important. It's a humble thing because it's been around for a long time. We put lithium batteries in our remote controls and for many decades now. But actually the lithium-ion battery, the ability to store energy at an increasingly lower cost. Cost is decreasing. The actual ability to store energy in there is increasing because of the chemistries and getting better and better. And they're becoming abundant through these gigafactories that are being built around the world. Of course, we've talked about the scaling factor, which is a drag on the whole thing. But if you have lithium-ion batteries, you can store solar, you can store wind. It makes solar cheaper. It makes wind cheaper. It makes the whole ecosystem of renewable energy, of more importantly, energy storage at the center of it. It makes it work better, and it makes us less wasteful. Just people, I guess everyone recycles. Well, a lot of councils are really key on recycling. A lot of people are really now key on energy, cost of energy in their house because of the energy prices rising. So actually, I think the general public want to become more efficient and less wasteful on everything they do. And I think the lithium-ion battery allows that, and it also gives additional access to solar, wind, with energy storage, especially for islands like Hawaii. And you guys are reliant heavily on diesel generators, if I'm correct there. So yeah, the lithium-ion battery and scaling it will happen. And that's why it's one of the pillars to this energy storage revolution. For me, it's the most important pillar.
Right, and to make that more clear, right? It's not so much about the input of what goes into lithium. It's the idea that there's not really a good substitute to lithium from an efficiency standpoint to store wherever that energy is coming from.
Exactly. Yeah. Look, we still need to source everything we're doing with energy input still needs to be solved. More solar, more wind where it's possible. Certainly more nuclear. I think that's one thing that people haven't discussed enough. That will happen at scale, I think, as well. And obviously more hydrocarbons, right? This isn't about eliminating hydrocarbons. It's about phasing them out sensibly, but you're still going to need to increase the baseload in gas and lower carbon hydrocarbons where possible. But the fact that lithium-ion batteries are there at scale allows you, to transition over to renewables quicker in a more stable way. But more importantly for me, it allows everyone to be more efficient. At the moment, you either use electricity that's generated from the power plant or you lose it. A waste. So I think that the fact that we're going through this energy storage revolution to store energy in batteries locally at a retail level, at a medium, I think is really important. And I think we're underestimating that this is another phase in the human existence. It's like a steam engine type moment. And we will see this in 20 years' time. That's certainly the way I feel about it. Yeah, I mean, it kind of echoes what I said before, is that if you have sort of battery storage, not just lithium-ion batteries, this could be vanadium flow, it could be sodium-ion. Problem with those is you need them to scale quickly and you need a lot of money to go into them. But certainly any stationary battery technology is in play here that can, and the demands on these batteries are very predictable. This is not aggressive. You put a lithium-ion battery in an EV, it's an aggressive environment, it gets knocked around, energy gets surged into it, it gets sucked out of it. There's a lot of stresses on those cathodes and anodes that break down the battery over time. On a stationary storage for the grid, it's very predictable, and generally you can manage it as well. That there is a role to play there. Again, the problem is getting these raw materials out of the ground, getting them made into battery cells is the limiting factor here at an economic cost. And the other thing about the grid market is that those guys that are buying batteries do contracts on like decade-long cycles. So their decisions now are like for the next 10 years. And if there are not enough batteries available to make that decision now, they'll probably delay it for 2 years and then come back and revisit it. So I think that for an industrial level thing like the grid, batteries are not quite there yet, but certainly they will get there, I think, personally, by the middle of this decade as this whole thematic plays out.
Let's talk a bit, Simon, on something I've heard you mention before, which is this idea that the Teslas of the world, if they're going to really go and really make this a bigger market, need to own the actual supply chain, meaning they need to own the mines. And I think you had referenced this idea that Musk had alluded to that maybe a few years ago. I don't actually know if that's happened or is planning to be to happen. But talk about that aspect of the EV makers owning the actual lithium mines and the entire process, and then what does that imply for competition? Because you can easily envision a scenario where Tesla basically finds a way to corner the entire market, and nobody can get lithium unless they get it through Tesla.
Yeah, so I think Tesla were the most, and they still are actually, the way they view this industry and the supply chain is completely different from every other OEM. Mainly because Tesla had to build stuff from scratch to make EVs. For me, it centers on the Gigafactory in Nevada, the actual sort of the balls to make that kind of idea come to reality. And, I've spoken a lot with JB Straubel, Elon's number two, about this. And him and Kurt Kelty were the team driving that sort of concept. It was Elon's vision, and then they had to fulfill it. But the fact that you go, we're going to build something the size of a football stadium at a similar cost to make the same amount of lithium-ion batteries that the world presently produces, just because we don't rely on our battery suppliers. They won't make enough. Panasonic won't scale quickly enough. Won't scale even. Won't even believe our vision of making EVs in the hundreds of thousands, let alone the millions. And I think that was a turning point for the company, in that if we're going to have to make the batteries, then we're going to eventually have to make the inputs. But they don't want to go. They don't want to be spending money and wasting money all the way upstream until they really have to. So that principle was played out between Gigafactory in 2017 when it was launched through to 2022 now. And it was really key that about 18 months ago, when Tesla were announcing, was it 18 months ago, maybe 2 years ago now, when they were announcing the Austin Gigafactory, and the plan with it was we're going to make cathode there. That was a really interesting step. Hardly any battery makers make cathode. And then they said we're going to make lithium hydroxide there, and we're going to make nickel sulfate there, two key inputs to the cathode. Of course, the Gigafactory in Austin is nearly up and running. It's going to be making batteries. It'll still take probably 2 years for them to make these new cells and get them properly out and working. But will the cathode plant be there? Will the lithium hydroxide plant and nickel? Eventually it will be, I think. And that for me shows that the only area they're not playing in then is actually mining. And of course, that links back to what Elon's comments were, a month ago, maybe, that we might have to get into lithium mining. I think the key thing, the final point on this, is that I've said now we've got to a stage where EV OEMs have to become miners. If they want to guarantee their lithium, their nickel, their cobalt, but certainly lithium and nickel are key in the volumes they need. They want to guarantee their lithium and nickel. The only nailed-on way you're going to do it is to own part of that mine. I'm not saying go there and dig it out the ground yourself and refine it, but I am saying own 50% or own 25%, guarantee that supply into your supply chain, because that's how far behind the whole industry has become. So that's one to watch. Will VW start owning mines? Will Tesla? Will Ford? Will GM? That's certainly a trend to watch, and I think it's going to happen in some way.
All right, so that's interesting. So does that mean that we could see a whole bunch of new private-public type of partnerships? How important is the government's role to help facilitate that dynamic? And then how does that change in different countries? A lot of countries that are very focused or have their economies very heavily centered around raw materials, a lot of those raw material miners and quote-unquote companies are really just partially owned by the government itself, which controls the raw materials. So talk through that dynamic a bit, because I think that's an interesting trend if that's going to be the case.
Yeah, so I think that what you'll see, and what you have seen actually in a few examples, is actually where the OEMs crossover is on that refining stage rather than the actual mine level. And then guaranteeing X amount of tons a year over 10 years from that refinery. VW have agreed, where are they? They're within China, actually. VW have agreed on a lithium and nickel deal. No, nickel and cobalt deal, I believe, within China. I think that I forget now, a Chinese company, I forget what their name is. Anyway, search VW, China, lithium, nickel and cobalt. But for me, the point is that I think you're starting to see those refining deals tied up. But it's still, on some industries, it still doesn't really guarantee. If you don't have an input into that mine level, then you're still not guaranteeing that supply. So I'm just watching who's going to take that first leap to go, do you know what? These new mines that are in the pipeline, that are being developed but don't have the money, when will a couple of $100 million, 2, 3, 4, take actually, for the rest to get institutional money, when will that be placed in the mines of tomorrow? And when? And because I do think actually that not enough raw materials flowing into the refineries at present. And yeah, so that's one to watch.
Okay, so oftentimes, obviously, my spaces are focused more on the investing side and how does somebody take advantage of some of these themes that we bring up. And I'm not looking for investment advice by any means or buy sell recommendations, but for those that are looking to try to place some of this from a longer term thematic perspective, what do you suggest people look for? Are there particular areas that maybe are not often talked about that you think are worth getting more of a spotlight other than buy Tesla or something like that? Talk through that dynamic a bit.
Yeah, so I always look for, I mean, Tesla are always going to be the number one thing that's just driving the market. The lithium majors will always be driving the investment market. Again, I'm not an investor. We don't do investment advice. We don't invest. We're independent. So we just give information on the physical supply chain. The majors, Albemarle, SQM, are certainly driving the story on the lithium side. Tesla drives the whole thing. Government announcements really add into the, fan the flames of major stocks. And then where we can't mention companies necessarily. I wouldn't want to because it's quite a volatile sort of area. But from a principal perspective, I would look at the guys that have been around for a while, that are making or aiming to make lithium chemicals and also do the mining in the lithium chemicals like lithium hydroxide, lithium carbonate, or likewise with nickel sulfate, them partnering, and I think this is key, partnering with battery makers or cathode makers. Because if you have a partner that's done it before, the cathode and the battery, like the hardest thing to make. If you've got one of those Korean battery makers on board, one of the Chinese or the maybe Umicore cathode makers or BASF on board. So actually, as an investor to help you along this way, then you're going to get into the market much quicker and have a greater chance of getting the funding and getting this thing up and running. And I think that's, for me, the telltale sign of a serious company is if these partnerships are there or if they're aiming for that. And certainly then if they talk about the lithium market like I would talk about it, or the battery market like I would, it's nuanced, it's not rocket science, but it's difficult, and these things are going to take time. If you hear rhetoric like this, you're on steady ground. Yeah, that's kind of my initial thoughts on that.
And then maybe for the last few minutes here, again, everybody that's here, I encourage you to follow Simon, obviously very specialized knowledge in a theme and a trend that's not going anywhere. There's been a lot of debate over whether EVs and this push for electric vehicles in general, if it's truly, let's call it ESG, because, and I don't know the mechanics of this, but the actual mining and the refining, what goes into that, it seems may actually be in some ways as bad, if not worse, from a carbon contribution perspective than using traditional gasoline or other non-clean sources of energy. Talk about the realities on the ground around the narrative and if really EVs and lithium batteries are as green as it's being portrayed to be.
Yeah, I also think it's a bit unfair. It's a really good question, by the way. I also think it's a bit unfair on the kind of the battery and EV supply chain, which is new, really. It's the whole thing's being built from scratch in front of our eyes. Whereas I can only imagine what if we had the ESG thing 50, 60, 70, 80 years ago, 100 years ago, when these oil supply chains were being built. It would have been chaos just from the same kind of scrutiny. But, there's a reason it's there, is to make sure we're building responsible supply chains, are furthering humanity, but also not damaging the planet beyond repair. So I get the principle behind it. I have a problem with the ESG metrics anyway. I don't think they're there for ESG, for environmental benefits. I think they're to greenwash a lot of corporates. And so that's another area that really people should be questioning. But at the same time, it's an industry that isn't improving all the time. In terms of answering your question directly, like, whether building the components of an EV from all these mines through to making a battery, making an EV itself, I would look at the components that go into making an EV as then there's 4, 5, 6 times of components that go into making an ICE vehicle, let alone the gasoline you're putting into the tank. We'll get onto that in a second. But if you think about all the nuts and bolts, and so I think of it from a physical supply chain perspective. I'm a geologist by background, mining guy that's become a supply chain guy and by default become an auto guy. But my principle is every one of those nuts and bolts, that's like cast in a refinery in China or something that uses coal as an input. But then where does that kind of iron ore come from? Comes from a bauxite mine somewhere. And you've got all these little parts of iron. There's copper in there. There's steel. There's aluminium. And so as well as the petrol and gasoline that goes into it, and that's a different kettle of fish, that there's no way an ICE vehicle is greener and lower impact on the environment than an EV. And there's never been a like-for-like study. So there has been some studies on supply chain impacts of batteries. There hasn't been a holistic study ever done. There's been little bits and a few headlines out there. But I'd love to see a light field, but that will take years and a lot of money. And whoever wants to do that, we're happy to throw data at it to actually have a really interesting comparison. But certainly, no, I can't see at all that EVs are higher impact on the environment than ICE vehicles. I can get into any more specifics if you want, but that's my general feeling.
Yeah, no, I think that's right. My point would be it's the way the narrative is often described. I think is too extreme. And yes, it's better, but it's always a question of the delta, right? The different. How much better is it, and can you really quantify that relative to existing cars and efficiency that naturally happens over time?
Yeah, and I think the energy storage comes into it really well here. Are we being more efficient with the energy that we put in? Can we use that not just in an EV? Can the electric vehicle battery back up other sources? Can we exchange power between EVs? Which is something recently I think I saw Toyota show, or it was Kia show off this really cool connection thing that you can actually exchange power. A really cool thing I always think Apple should do is you touch an iPhone onto another iPhone and give your mate 10% battery. Can we start exchanging power on an individual level and do things that way? And that changes sort of everything, really. And that kind of is quite a step forward in efficiency of energy, in my opinion.
So again, everybody that's here, make sure you follow Simon. I did this, and this is a bit of a challenge for me because, again, this is not a space I obviously can speak too well on, but hopefully the questions made sense. Simon, I do appreciate your hour here. For those that are looking to at least educate themselves more on the space, I assume they can just check out your website and get in touch with you.
Yeah, definitely. We've got a newsletter on the website. It's free. There's a little red hyperlink at the top. Twitter, LinkedIn, we're really good at. Benchmark Mineral Intelligence. So social media, we put lots on. So yeah, you'll get your fix on that.
All right, very good. Thank you, everybody, for joining, and enjoy the rest of your day. Thank you, Simon.